Todd Fitton. Hey, how are you, sir?
I am fantastic. How are you?
Doing great, doing great. I know things have definitely changed since the last time we spoke. I'm finally in my new house right now, which explains the chaos around me and all the moving boxes. But I'm really glad. I just want to jump on really quick and let all of my audience and clients know exactly what's going on in the market as of this week and what's changed. So first and foremost, how are rates? What's it looking like out there?
Rates are still good. They've ticked up a little bit on us. Just in the last, I'd say probably 3 days, we've seen rates come up just a little bit, not a lot. In some cases, it's just the cost for a rate has come up. The market kind of softened a little bit with the stock market rally. With the bond yield, though, going the way it went, we're hoping for a strong auction today. I haven't checked the results on that. If we do have a strong auction on that 10-year, then we should see things start to level out and come back down again and give some support to the rates. But rates are still good. I mean, I'm still 2.25, 2.375 on an FHA loan. So it's still pretty crazy.
Wow. Yeah, that still sounds really low. So that's awesome. I'm really appreciative of that information. So I wanted to bring up the very first talks with Todd the Lender during COVID that we had. You had mentioned if this continues for 6 months, we might be having different conversations. So I wanted to ask you, what are you forecasting? We're kind of right around the 6-month marker of all this going on. What are you thinking is going to happen to us in this market?
You know, the market's actually pretty easy to judge right now, because I was just on a sales call earlier, and I guess the benefit of it right now, because of COVID, we are strictly in a supply and demand situation. The low supply and the high demand, that's what's driving our prices of our homes up. The market uncertainty is what's keeping the rates low. So it's kind of the perfect storm, especially for sellers right now. You know, if they're wanting the most bang for their buck, now's a great time to sell your home. And then they have the buyers have the benefit because the rates are super low. So the market is very predictable at the moment, as far as we're going to keep seeing prices go up. We're going to see interest rates remain low, and we'll see how it shakes out in the future. As far as the outlook, I don't think we're coming out of this COVID thing anytime soon. I just don't, at least in California, I don't get the feeling that our governor really has any desire to pull us out, and maybe rightfully so. I mean, everybody's opinion of this is different, and you know, most people are on a better to be safe than sorry type of mentality.
Yeah, no, understood. You're right. Yeah, I think, nationwide, it's hard to really predict, but I think, yeah, state by state, depending on, the powers that be and the governing kind of what their decision is as far as pulling us out of this. So that kind of leads me to my next question. When we had first discussed when COVID hit, there was this lingering forbearances and what they look like and how they were going to be structured and who would even take part in these. So for our market, what are you seeing as far as, the end result of these forbearances?
The only effects I've seen within my clientele on the forbearances is companies like Wells Fargo. There was a large amount of their clients that they put into forbearance. I've got one right now in particular that they've made every payment on time, but when you pull their credit, it still shows they're in forbearance, and Wells Fargo was not reporting their payments. So we had to get extra documentation, obviously, to show that and make sure that we met the guidelines that Fannie and Freddie have put out there. And we're good on that one. As far as the long term on the forbearances, I don't know if that's going to go away pretty soon as far as what's being allowed. But I would say as long as kids aren't allowed to go to school, we're going to see those forbearances, because some parents can't work. They can't go to work if they've got to homeschool kids or, independent study or whatever it might look like. So that's the forbearances. I don't really haven't been a huge issue for us. I mean, we live in an area that is typically, people are working, and we're not seeing people lose their jobs nearly as much as we did, pre-COVID. The one thing that we're seeing big changes on right now is our self-employed borrowers. They're being hit pretty hard with some additional guidelines that have come up in the last 30 days that, if you're self-employed and you have a P&L that you put in, which was our only requirement before, but if the P&L doesn't have certain characteristics that match on the bank statements, it creates a whole nother list of things that we have to provide. We either have to provide additional bank statements, or we have to do a certified profit and loss, which is they actually go to their CPA and have the CPA audit it and sign it off. We're having a tremendous amount of deals fall apart at the end because of these guideline changes, because we do have a lot of self-employed borrowers that they don't use CPAs, and if the bank statements don't match, they don't match. There's nothing that they can really do about it. Whether they got paid a bunch of cash on the job or whatever it might have been that caused it to where the bank statements didn't actually hold up to what their profit and loss statement showed. So that's probably the biggest takeaway recently has been our self-employed borrowers. I have a few right now that we're having to get additional documentation on because of the new guidelines.
Wow. So as far as that with the new guidelines, they can sometimes come out mid escrow when you have a file already active and these are coming out. So how are you alerted of these, and what's the timeline? Do you get any kind of like grace period, like a heads up that it's going to be coming down the pipeline?
On these particular guideline changes for self-employed borrowers, it was immediate. So as soon as it was released, it went to our underwriting team, and our underwriting team dispersed it out to the loan officers so that we had a heads up of what it was changing to. But it didn't really give us any comfort because it was already going to affect the files that we had in escrow.
Wow. Okay. Wow. That's interesting. So I know we've discussed this before, supply demand. We have very low inventory still. Actually, I think it's safe to say we're even lower than we were the last time we spoke, which is crazy. So what are you seeing? You work with a lot of agents, not just myself. What are you seeing other agents are doing and your other clients are having to, sort of negotiate and do to get these applications into a true escrow and get these clients a house?
I would say first and foremost is a love letter. If the seller can get some kind of an emotional attachment to the buyer, just again, as an example, just had one that was an extremely competitive home. It was a price range that's highly desirable, a location that's highly desirable, and there was, I believe, 13 offers, and every single one of them was over the ask price. So we made sure on that offer that the buyer put a love letter in, and they talked about seeing some of the children's chalk drawings out in the sidewalk, and then they talked about their own kids and how they enjoy utilizing their driveways as a art studio. And the sellers really liked that letter. They cared a lot about their community that they lived in. They cared a lot about the neighborhood that they lived in. They were only leaving because of a work situation. And ultimately, they decided to go with our offer, and our offer was $10,000 less than the highest offer that they had. So the love letters do help, and we're starting to see that as really, it needs to just kind of be a part of every package when you're putting an offer in.
Wow. Okay. Yeah. And I know in the past, I've definitely had that happen with some clients where we were putting in love letters, but it sounds like you just said, it's becoming part of the normal packet of submitting an offer now. So I think that's really interesting. And I think you're right. If there's an emotional attachment, because, at the end of the day, a house is a house, but it becomes a home for a family. And I think as a seller is seeing who's really going to love this house as a home and who's going to take care of it and what's their story, I think that definitely is going to impact decisions of sellers, because as you just said, no matter what, they're going to get a bunch of money for their house right now. There's so much competition. They're going to get asking price or over most of the time. So trying to have a buyer show that it's going to go to the right person as them. And I think that's really powerful. So I appreciate you sharing that. I know that's been a tactic before we've used, and I think it is going to become the norm now.
Yeah, it really is. I mean, if there's 13 offers, I bet 10 of them have a love letter, at the end of the day. So you got to put a strong love letter, be really attached to the property and let it show in the writing. And it can help, it really can. I think the offer that was above ours was, it was 10,000 above ours, and they actually said that they would pay the difference of the appraisal. So
Oh,
there was no loss to the seller whatsoever.
right,
If 425 is what they offered, 425 is what they were going to get.
right.
If it came in 50 grand low, they were going to pay the difference. So it was one of those situations where we weren't real sure how we were going to get it, but we put that love letter in there, and they did bring that up when they called. They brought that, the listing agent brought that love letter up and said that it really did kind of help to sway them over to our side.
Good, good. Well, awesome. Well, thank you for sharing that. It's definitely going to be something I think all of us agents and, buyers out there will have to keep that in mind as just submitting an offer, put that letter together, let the sellers know your story and how much you love the house and want the house. And that's a really good, deciding factor. So that's awesome. So just to leave us off here, Todd, just wanted to touch base with you about this, everything going on in our market and, the world of mortgage lending. So what are you kind of forecasting for the next couple weeks? Are we going to be coasting at a good rate? Are you thinking they're going to do maybe some ups and downs like you'd seen?
I think we're going to see a gradual short-term descent in the market, which is going to give us a little bit higher interest rates. I'm not real stressed about it just because rates are so crazy, stupid low right now. We could see rates come up an eighth to a quarter and just kind of hang out there. And then as this auction takes place and we see where the stock market goes, it could tip back the other way. But we're going to hit a bottom at some point in time. I'm not sure if this is the bottom of the rates or not, but I would definitely say anybody that's kind of on the fence about buying, don't wait for rates to get lower. They're not. I wouldn't plan on that. Rates are so crazy low right now that, now you're just getting greedy.
Yeah, take where you can get.
Yeah, exactly.
Great.
I don't know how many times I've played roulette and left my money on the table, and then that was the time I lost.
Yeah,
So,
it's right. Exactly.
Sometimes you got to cash in and take advantage while you can.
Oh, 100%. I agree. No, it's definitely a great time to be a buyer. It's a great time to be a seller. The market is strong, even though it's a different kind of strong than I think we're used to. So I really appreciate this update. And I'm going to touch base with you soon for another talk about what you were discussing with the auction and watching the stock market. So I definitely want to inform everyone coming up what happens with that. So we'll definitely do another video. Hopefully by then I won't have boxes in the background and be in disarray, and I'll actually be able to get things a little more sorted out for my video background. Maybe I'll have to do a virtual one like you, and I'll just put like I'm at the beach or something.
Yeah, people have no idea I'm sitting in my backyard right now.
I know I'm so like, oh, just look at my background, I moved, and you're just like Vero Mortgage.
That's right. Nobody knows where I'm at.
I think that's better. Maybe I gotta jump on that virtual background train. But thank you so much, Todd. I really appreciate your time as always, and we'll definitely touch base soon to catch everyone up on what's going on in the market.
Sounds good. Thank you so much.
Talk to you soon. Thanks.
All right. Bye.